Morning. Let me show you how I made a 1.7 to risk to reward on GBP USD yesterday actually. Okay, so that was my first trade of the week because Monday was quite slow. So let me show you the logic as to how this trade came about. Okay, so after we saw the last Friday's push of GBP USD because of NFP, okay, so let me show you how big this move was. Yeah, from here all the way to the bottom, that's about 102 pips, okay, which is quite large. But the significance of this move actually happened yesterday, okay. So essentially we can see that there was 1, 2, 3, 4, and then 5. So this was essentially that's where essentially the support was formed. Okay, it was formed on Sunday night, and again, so it touched basically 4 times. Okay, now what happened on Monday? Okay, and remember guys, for a trade to form, it takes time. It takes a lot of time. It doesn't just happen straight away. Okay, so on Monday around 10:30, we see a high volume sweep of all this. Okay, and what does that mean? High volume sweep means that all of these orders, okay, basically all got taken. So all of them, they got taken. And why? Well, because we can also see a fair value gap on the 1 hour. So I'm going to show you right now what I mean by that. Okay, and if you don't know what a fair value gap is, then please message me. So I can see here like this. Orders get filled from here. Okay, so what happened? The 50% mark of this fair value gap was respected. Okay, so what does that mean? It means that if the price stays above this fair value gap, it means that it's respected and it's not gonna basically get filled. It means that it's gonna just it took more orders, so it done an LQ sweep, it done a sweep of high volume. Okay, so let me write that down. High volume sweep, and now essentially now we know that buyers have entered into the market, because look what happens the moment that it surpasses this level. Look how strongly the bullish candle comes in. Okay, and this is in a 1 hour, guys, you know. So if we go on a 15 minutes, you will see how big of a push that was. Look, the moment it touches, you see 1, 2, 3, 4, 5, 6, 7, 8 bullish candles, literally, guys. Okay, so that was on Monday. Okay, but what else have we learned on Monday? Okay, on Monday we have learned that the price is ranging between the price of 1.27 and 1.2740. So what does that mean? That means that this is a range of roughly 40 pips, which is not a big range. Okay, when the price is ranging, you cannot make that much money. Okay, the real money comes in moves like this, 100 pip moves. Okay, at least for Forex. Okay, so now that we have learned that the price is in a range, what do we do then? Okay, because if the market is not trending and you still want to make money, what do you do? So this was Monday. Okay, this was the significance of Monday. I still didn't take a trade on Monday. Okay, bear this in mind. So this is all me analyzing yesterday. Now come yesterday, okay, I see this. I see this big push over here. Okay, so the importance of a range, okay, is when you see a buy side sweep, then what happens is that because there are orders everywhere, okay, when in a range there are orders here, okay, and there are orders here as well. Okay, because there are pending orders as well. There are buy limits, there are sell limits, there are sell stops, buy stops. Not everyone trades with market execution. Okay, there are 4 types of orders in the market, and the big banks, they trade basically with pending orders. They don't trade with market execution, because you cannot just, let's say JP Morgan, they don't go on their MetaTrader 4 app or market execution and they just put like buy like 100 lots. It doesn't work that way. Okay, they have orders of like 10 million, 20 million, and it doesn't just happen like straight away. Okay, so how does it happen? It means that when the market is basically ranging in this way, the banks are basically buying small amounts, let's say they bought like 1 million here, then they bought like 5 million here, then they bought another 1 million here, and then they bought another 500k here. So they don't, the bulk of the orders is always in at the cheapest price, and the cheapest price at this level was basically here. Okay, this was basically the cheapest price logically. Like if you look at it, that's basically the cheapest price that any buyer could have had. Okay, and what's the validity of this place as well? This is also where the sellers have exited. Okay, this is because in this market, okay, in the Forex market or any financial market, it's all about buyers and sellers. Okay, buy low, sell high, buy low. But for these people to be able to sell, someone has to buy, right? So this transaction was basically based on smart money, what you call smart money, like big banks, institutions. Everyone that lost money in between is basically you. Okay, it's basically you being liquidity for these people. Okay, so you need to understand the relationship between smart sellers and smart buyers. Okay, this is essentially what I'm teaching you. So right now, smart money has still not entered. Why? Because this move hasn't even happened. Right now, they're just gathering options. They're just gathering trades. Okay, so how did I actually take the trade then? If you're saying, okay, right, like, where's the smart money? Okay, I don't know. Fine. When the market is in a range, okay, you need to look for buy side sweeps and sell side sweeps, because there, like I said, there are orders everywhere. There are pending orders. For example, here there are sell limits, and here there were buy stops. Okay, and that's why the market moved. So what I do in cases like this where the market is ranging, I take my Fibonacci tool and I draw it from the bottom of the range to the top of the range. Okay, my Fibonacci is slightly different than yours because I've adjusted my numbers. So I go, actually, let me make this a bit darker. See if I can do that. Okay, that's gonna take a bit of, yeah. So, as you can see, it's divided into 4 components and it's divided by 0, 0.25, 0.5, 0.75, and 1. So, what's the importance of the Fibonacci, okay? Whenever it's in a range, okay, the price is more likely to come back to the 50% level, okay? So, and as you can see, let me show you an example, okay? So you can say that this basically is a range, okay? This is basically a range, okay? And you can see that the price, after it moves to any of the, let's say this is the upper end, this is the lower end, okay? You can see whenever it hits, it kind of like moves back to the 50%, okay? Like when it reached here, it went back to the 50%. So that's basically the reason why, because the price has to balance out. Whenever the price is too cheap, someone is going to buy, right? And whenever the price is expensive, someone is going to sell. So the price has to like balance out at some point, okay? And that's essentially what happened here, okay? Because the market is in a range, the only way for us to take a trade is to sell at the higher end, okay? And to buy at the lower end, okay? That's basically the only option you have if you want to have a trade, okay? So let me make this bigger so you guys can see what I'm talking about. So I'm gonna make it red. Okay, so what was my logic yesterday? Okay, after I saw that the market basically swept so it took orders from here. So that's what a sweep means. Okay, a sweep is a big displacement in price where a sweep is a big displacement of price. Okay, so what this sweep done is basically it took a lot of sell orders in the form of sell limits or sell stops or buy stops. Okay, it doesn't matter what it is, but it took orders. Okay, and how do we know that this actually happened? Okay, because you can see like with how much violence the pair just dropped, literally. Okay, so from here to here, okay, in 1 hour it dropped 34 pips. But look how long it took to go from this point to here. It took 20 hours. It took literally 1 day to go the same amount of pips, while it took 1 hour to basically just fall. Okay, and basically why is that? That's because the smart money has entered. Okay, when the smart money has entered, that's basically the logic behind it. Okay, that's the logic behind moves like this, is when the smart money has entered. Okay, they basically took a lot of orders from here and they pushed the price down. Okay, once I saw that, I waited for 3 o'clock, because I only trade at 3 o'clock, from 3 to 8 o'clock. Okay, this is my logic. Okay, because if you try and trade those hours, you will also see the reason why. And the reason why is because at 1:30 there's a lot of news. Okay, and also it's after London session. So this happened during London session, guys. So if I traded anytime before that, I would have been liquidity basically. So if I sold, let's say I sold here, okay, 1 second. Let's say I sold here, okay, because I thought, oh, I'm so smart, yeah, I would have gotten taken out. That's why I only trade after 3 o'clock, because after 3 o'clock, all the moves are done, okay? All the moves are done, and your only job will be to basically figure out whether smart money has entered or not, okay? So once I saw the smart money basically took out the positions, because obviously it's in a range, okay? That's the logical thing to do, because it would be outrageous for us to imagine that it's going to break this range, especially because yesterday there was no news. So that's another tip, guys. Whenever the price is in a range, it's very hard for the range to break unless there's big news, such as today. Okay, so what did I do? Okay, let me show you guys what I did. I'm gonna take this off, guys, because you're gonna get confused. So once I saw that the bottom of the range was basically achieved, okay, I saw this big candle, this big bullish candle. So for me, the blue candles are bullish and the black candles are bearish. Okay, so meaning the blue candles are buys and the black candles are sells. Okay, so in case you're a bit confused as to why my chart is like this. Now I'm gonna also remove this so you know what I'm doing. So once I saw this, I basically drew a fair value gap, an FVJ, and I saw that it respected the 50%. This was my cue that basically, okay, it's not gonna go below the logic of the FVG is that it's not gonna break my FVG and go below it. Also, it's at the bottom of the range and it's after 3 o'clock. Well, yeah, as you can see, it's like 3 o'clock, okay? So after 3 o'clock, literally this move happened, and I was like, okay, you know what? I'm just gonna buy. And I bought roughly around 14.7. Okay, my stop loss was 15 pips. Okay, because I could have even had 10 pips, and my target was the top of the range. Okay, and that was basically a 1.2 a 1.7 trade. Now obviously it went higher after that, but for a day like yesterday where there was basically no way for me to get too much out of the market, that was enough for me. Okay, and you can see on the screen, this is how much I made, and this is basically how I essentially traded GBP USD using very simple concepts. And this is how I use the Fibonacci tool essentially whenever it's in a range. So if you guys want to learn a bit more as to how I trade and how I use my strategies in order to take just one trade a day to make an extra £300 to £400 a day, then let us know.